Whoa, 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 fam. It's been an exciting week to say the least. Bitcoin has been on a mad tear upwards. Hello, I'm Crypto Casey, and welcome to another episode of Last Week Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, top gainers, as well as the latest global news stories affecting the crypto markets this past week. This week, we will discuss how the Fed's policies cause unintended consequences, US stimulus antics, crypto decoupling from traditional markets, and Bitcoin's price pop upwards. To check out all the links to the articles we discuss, go to cryptocasey.com/lastweekcrypto. This week's episode is brought to you by Crypto.com, an exchange with over 55 different cryptocurrencies. On Crypto.com's mobile app, you can buy crypto with bank transfers, credit, debit cards, or crypto at true cost with no markups. Crypto.com also has a desktop exchange that is solely for crypto-to-crypto trading, which isn't available in the US quite yet. If you use the link below to sign up for Crypto.com, you'll receive $50 worth of cryptocurrency for free when you use the referral code CryptoCasey, all while supporting the channel until October 31st. It's so important to have relationships with multiple exchanges with the incoming bull market. Many times, exchanges have to hold funds, freeze transactions, and lock accounts when they are overloaded with increased demand. So check out my list of recommended exchanges below to sign up so you have multiple options to trade when the crypto market really starts to take off like it has this week. Also, every Wednesday, I conduct a weekly AMA or Ask Me Anything at Instagram.com/CryptoCasey. So use the link to my Instagram account listed in the description area below to follow me and ask me anything you want every Wednesday. Please note that I only have one official Instagram account, which is Instagram.com/CRYPTOCASEY. I never engage in direct messages on Instagram. I will never ask you to install mining software on your computer, and I will never ask you to send me money or crypto in exchange for investment services. So please be mindful of the rampant amount of social media accounts being made to impersonate people in the crypto space. Awesome. Let's hit Last Week Crypto. Looking at the top cryptocurrencies by market cap over the past week, Bitcoin up an epic 11.8%, ETH up 7.9%, XRP up 2.7%, Bitcoin Cash up 3.1%, and a salute to all of you Link Marines out there in this surge up to 10.4%. Nice. Looking at the top gainers this week, Reserve Rights Token up 27%, Waves up 26.4%, Quant up 15.8%, and Stellar up 13.1%. The markets have been rocking this week, but let's mirror the market trend lines and start from the bottom with some sideways bearish news and then tear upwards into the big, bangin' bullish news. It's no surprise that governments, the banks, and big institutions are feeling more and more threatened by the impending widespread adoption of Bitcoin and its underlying blockchain technology. So let's talk about something known as the Cobra Effect. Cobra Effect 101. With the rise of government and central bank intervention in the economy and markets, the term Cobra Effect has experienced a revival. But what is the Cobra Effect and how does it work? Here's Cobra Effect 101. The term Cobra Effect is used to describe a situation where the solution to a given problem makes the problem worse. It is commonly used when talking about the unintended negative consequences of government policies. Well-intended solutions may make matters worse. The term originates from an ill-fated British policy implemented in India during its colonial rule. Concerned about the number of cobras in Delhi, they announced a policy that offered a reward for dead cobras. It started well. Many dead cobras were turned in for the reward, but soon, certain enterprising Indians concocted a plan. They began breeding cobras, killing them, and turning them in for the bounty. Annoyed by the abuse of the policy, the British scrapped it. Stuck with a bunch of now worthless cobras, the breeders released. Sound familiar? Like maybe when the governments bail out corporations to save jobs, and then corporations treat bailouts as house money to gamble with? Or when executives are compensated based on increased shareholder returns, and higher risk can lead to higher rewards, and in the end, Uncle Scam's got your back, why not take on more risk? Why is this, and has this been, super obvious to everyone except the people in charge of this stuff? Well, for better or worse, the Fed is starting to question its own policies and are pushing for tougher financial regulation as concerns grow that monetary policy is encouraging behavior detrimental to economic recovery and creating pressure for additional bailouts. And the Feds are saying, I don't know what the best policy solution is, But I know we can't just keep doing what we've been doing. And on a more global scale, the International Monetary Fund had a live stream titled Cross-Border Payments, A Vision for the Future, where they discussed their concerns with the quickly evolving financial tech landscape. So in summary, here's the short version. The IMF, can we please work together? USA, slow the F down, everyone. Europe, we need to control this. Asia, we're already there. Okay, I understand that as the global reserve currency for the time being, United States should approach a quantum leap in financial technology with caution. But come on, let's be honest. It's pretty ridiculous when in the United States, this type of thing is still going on. Had to go into a physical bank branch with 2 forms of ID for permission to spend my own money. Everyday commercial banks demonstrate their utter inability to function in the modern world. And no amount of fintech, APIs, or pretty UX fixes this. Bitcoin fixes this. So between slow, utterly daft Fed policies that allow for the resurgence of the Cobra Effect, on top of out-of-control money printing, some COVID crisis interlaced, and a myriad of other bearish situations, it's not surprising that a macro expert issues apocalyptic forecast, warns historic economic collapse likely. David Hunter says a parabolic rise in equities will set the stage for a huge market crash. I think we're going to see something that includes a very large financial crisis, probably the largest financial crisis in history, including major bank failures, not so much here, but Europe, maybe Asia banks, and also a lot of involuntary debt liquidation. Though he thinks a crash is imminent, Hunter believes that the steepest part of the current upward rally is still ahead of us and will occur between now and around the time of the US election. Yeah, the traditional markets are pretty much numb to the whole stimulus fakeouts at this point, which who wouldn't be, considering current stimulus progress? I mean, an argument could be made that whatever this kid is doing is more constructive than the US Congress and stimulus efforts. At least he's producing some entertainment value, am I right? Because at the end of the day, the bipartisan program should be pretty obvious to everyone right now. If markets are down, release a stimulus hope quote. When in doubt, do it several times a day. If a deadline passes, make a new one. Rinse and repeat until the election. Well, what's been great about this week is we are finally seeing Bitcoin decouple from the stonk market and all of this string-along stimulus garbage, forging its own path upwards. Yeah, well, Casey, I ain't got no stonks. I got gold, baby. Not so fast, you wily gold bug. If you're holding gold, you're going to end up losing the race. Gold is breaking down versus Bitcoin. As expected, CC Michael Saylor. Everyone take note. The next thing I'm expecting is the correlations between Bitcoin and the dollar and Bitcoin versus equities to break down too. Let's see. Look, follow the money and take it from the big, rich, greedy institutional investors. Grayscale adds a cool 300 million in a day and 1 billion this week. Grayscale added a cool 300 million in assets under management in 1 day, boasts Grayscale CEO Barry Silbert. Also, just announced, Franklin Templeton invested in Curv, one of the leading crypto custodians. With 1.4 billion, actually trillion, assets under management, Franklin Templeton is one of the leading asset management firms worldwide. Add them to the list of institutional investors supporting crypto. And man, just look at how much this list of institutional investors has grown since I featured it in last week's episode. Incredible. Crypto is approaching an inflection point for global recognition. And as recognition gradually increases, then suddenly it will be mainstream. And the price increase will follow that same pattern. It will increase gradually and then suddenly pop off to the moon and beyond. Are we arriving at that inflection point? Or have we arrived? Because Bitcoin absolutely exploded this week when news of PayPal to open up network to cryptocurrencies hit the scene. PayPal Holdings Inc. said on Wednesday it will allow customers to hold Bitcoin and other virtual coins in its online wallet and shop using cryptocurrencies at the 26 million merchants on its network. And the next day, Bitcoin officially flippens PayPal. The asset has overtaken the network's market cap following an announcement that PayPal intends to integrate crypto. So what can we expect price-wise of Bitcoin in the short term following this massive tear past 12K? Mike McGlone states, Bitcoin has a good chance of reaching its $14,000 resistance mark for about a 2x gain this year in our view. Similar to crude oil in 2019, the benchmark crypto started 2020 near the lower end of a range that should simply snap higher. Awesome. Well, what's next after Bitcoin crushes $14,000? Well, Bitcoin now has a 7% chance of beating $20,000 highs in the next 2 months. Bitcoin odds are repricing quickly, says Skew, as one analyst highlights the current price pump's organic nature. And let us not forget zooming out and looking at 2020 at large, in spite of the coronavirus pandemic, in spite of massive printing of US dollar, in spite of economic uncertainty, in spite of an impending US election wrought with laughable debates and lack of stimulus, in spite of all of these terrible things that make up the totality of the year 2020, Bitcoin up more than 80% in 2020. Bitcoin has brought us to great heights price-wise this week on the coattails of the PayPal news. What can take us even higher? Batman, Bitcoin's Robin, of course. Ethereum can rise to $800 in 2020 if this bull mini-cycle repeats. The price of Ethereum is showing similarities with previous bull cycle beginnings as $800 ETH is coming back in play. I mean, after all, the Zinc and testnet was a success. Ethereum 2.0 deposit contract to launch this week, says ConsenSys Dev. An Ethereum 2.0 developer predicts the protocol's deposit contract will be released in a matter of days, and that ETH 2.0 staking will go live this year. In fact, Ethereum 2.0 launch could be 6 to 8 weeks away, according to developer. Awesome. Well, that was Last Week Crypto with me, Crypto Casey. If you enjoyed this episode, please make sure to like this video and subscribe to my channel for more crypto content. To check out the links to all of the articles we discuss, go to cryptocasey.com/lastweekcrypto. So were you totally distracted this week from watching all of the crazy price action? Or does watching the price chart stress you out? 20K per Bitcoin by the end of the year? Let me know in the comments below. Be safe out there.